Hi everyone, welcome back to the Web3 channel. My name is Zach. In this video, we are continuing to follow up on news regarding crypto, Web3, and Ukraine and Russia. Of course, horrible scenes that we're seeing right now. Devastating to watch, of course. But in this video, we're going to be looking at what SBF, i.e. FTX CEO, has been talking about when it comes to the weigh-in on the Bitcoin market outlook amid the Ukraine crisis. Bitcoin's correlation with the US equity market could be one reason for its current decline, but Eastern European money destabilization could push Bitcoin as a crisis hedge. The world woke up to a sea of red that was not necessarily limited to the financial markets, as Russia declared war on Ukraine early Thursday. The traditional financial markets, along with the crypto markets, have been sliding bearishly for the past week and saw a rapid decline early on Thursday, apart from crude oil prices, which jumped to an 8-year high above 100 USD. The Russian invasion on Thursday triggered the bears, leading to a 500 billion USD crypto market sell-off, where the majority of the cryptocurrencies lost critical support to a trade at a 3-month low. The crypto market capitalization saw a 10% decline. That being said, let's have a look at what SBF is saying here. Some thoughts on crypto, Ukraine, and stocks. Not financial advice, and more importantly, there might be a war. That's really bad for the world. Fuck all this price stuff. Go outside and do something nice for someone. Seriously, do something nice. This world could use it. I'll wait. 3% in the last day. 3 in the last day. The S&P 500 is down 4% and Bitcoin is down about 8%. Why? Well, I mean, because of the obvious. It makes sense that stocks are down. War is generally bad. What should Bitcoin be doing here? Well, on one hand, if the world gets shittier, people have less free cash, basically selling Bitcoin along with stocks, etc., to pay for war. On the other hand, this is likely destabilizing for Eastern European currencies and more generally for Eastern European financial systems, which means they might be looking to alternatives. If you're in Ukraine right now, where would you trust your money? Looking, of course, at what I can see being the ruble USD pair. So there are arguments both ways for what should be happening to Bitcoin right now. I'm not really sure. I would have guessed it would go down based on the fundamentals, but it is down a lot. Why? Well, let's say there are two types of people in the world: fundamental investors and algorithm followers. Fundamental investors look at the situation, are uncertain which direction Bitcoin should move. Algorithms followers consult the data. Historically, what's the trend? Well, over the last year, there's been a really high correlation between crypto and equities. The main reason is monetary policy moves in expectations of inflation and interest rates change USD and other fiat currencies. More inflation, crypto plus equities up versus USD, and so the algorithms to look at the data and decide based on that Bitcoin should be 80% correlated to the S&P 500 with a beta of 4, i.e. if S&P 500 moves 1%, Bitcoin moves 4%, then war happens. Fundamental investors are neutral, but algorithmic investors see the S&P 500 go down 4% and so expect Bitcoin to go down 4 times 4 equals 16% based on historical studies. There's a push and pull, with fundamental investors buying and algorithmic investors selling. On net, Bitcoin ends up halfway in between, down 8% on the day. So who is right? Well, I don't know. Maybe the algorithmic investor is. Maybe we think this is about financial systems, but actually the dominant effect is just everything selling off to fund wars. But maybe they're not. Maybe they're basing their judgments on monetary policies. But this isn't a monetary policy move. So Bitcoin goes down 8%, half of the 16% that the algorithmic investors predict, at which point their model updates a bit. Bitcoin went down less than 4 times they predicted and a cycle begins, maybe. Or maybe the real effect here has nothing to do with any of these things. Maybe it's like illiquidity. If you're risk averse, maybe you're selling what you have right now because who knows what will happen, and markets are illiquid right now. Who's buying volatile assets? Anyway, who knows what will happen? Anything could, and I don't mean to imply I know what will, but I also think we're probably in a new regime than we've been in the last year and a half. We'll have to see how things work here, and again, do something nice for someone. The world could use it right now. And obviously, to be very clear, as I feel the need to say, that Web3, myself, I stand with the people of Ukraine. What is happening with Ukraine and Russia right now is absolutely abhorrent and horrible to see, and we're going to continue to try and keep you updated on what is the important stories within the Web3 space regarding this situation, and my thoughts and prayers, etc., are with the people of Ukraine. That being said, this is the Web3 channel, covering everything happening. Subscribe for everything going on. I'll see you in the next Web3 video.